Okay guys, as promised, I will be solving the MCQs, and to solve these MCQs you need to follow my previous 2 lectures, and then only you can be able to solve these MCQs. So starting with the first MCQ, which of the following characteristics means that information is reasonably free from error and bias? Faithful representation, relevance, consistency and predictive value. As taught in the first lecture, see, the qualitative characteristics has faithful representation, and under faithful representation you can remember F and C. Faithful representation starts with F, and the mnemonics also starts with F. So faithful representation has 3 components, F and C: free from error, neutrality and completeness. So faithful, so free from error will be faithful representation. I have taught this in the previous lecture. Moving on to the next one, the objective of financial reporting stem from which of the following sources? The need for conservatism, the need for external users of the information, reporting of the management consistency, or reporting of the management stewardness or stewardship. So let's study the question once more. The objective of financial reporting stems from which of the following sources? Means why are the financial reports needed? Conservatism is a term, it's a accounting method, so this is not needed for financial reporting. The needs for external users are the only ones who needs the financial reporting the most, because they want to know what's happening internally. Reporting of the managements are itself internal, they are only controlling the company, so they don't need the financial statement because they already has it. Reporting of the management stewardship means how the management is working, reporting on the management internal control. This is not highlighted in financial report. The financial reports only has balance sheet, cash flow statement, income statement. So all these are to be studied by the external users for investment purpose and for decision making purpose. So the answer will be B, the needs for external users of the information. Coming to the next one, which of the following defines equity as it relates to a business entity? Net revenue, total revenue. Which of the following defines equity? Equity, as I said in the previous lecture, asset equal to liabilities minus equity stands for. Okay, so we know the formula that total asset equal to total liabilities less equity. So equity can also be defined as equity equal to total asset minus total liabilities. So moving on to the next one, because coming to the next MCQ, according to the FASB conceptual framework, the primary users of financial reports include all of the following except, means who does not require the financial reports for the primary use? The investors, creditors, lenders, regulators. The investors do require the financial reports for investment. The creditors and the lenders also do require the financial reports for lending the credits, but the regulators are not the primary users of the financial statement. So the answer will be D, regulators. The next MCQ, according to the FASB conceptual framework, what does the concept of faithful representation include? So if you have studied my previous lecture, I have covered this. Wait. So here it is, the qualitative characteristics. The primary characteristics: relevance, faithful representation. Faithful representation has FNC, completeness, neutrality, free from error, and relevance has predictive value, confirmatory value and materiality. So the question says, according to the FASB framework, what does the concept of faithful representation includes? The faithful representation includes FNC, completeness, neutrality, and free from error. See, FNC, N is neutrality. So C is completeness over here and C is certainty over here. So if you study it properly, so you will get to know the answer. It's neutrality. I am sorry for being slow, but it's okay. You can keep my speed in 1.25x or 1.5x and complete it fast. Now coming to the next MCQ, I am going to cover all MCQs, 2036 MCQs. I am going to cover all one by one. Means not to hurry. I will upload the videos daily and I will cover all the books and including my notes. So coming to the next MCQ, according to the FASB conceptual framework, neutrality is an ingredient of faithful representation. As I showed you, FNC, faithful representation, neutrality, and completeness. Next MCQ, according to the FASB conceptual framework, the quality of information that helps users forecast future outcome. Future outcome, you can do it by common sense. See, future outcome, we need to predict future, right? So confirming value, predictive value, representational, faithfulness, neutrality. It is predictive value. This is with common sense. Next MCQ, according to the FASB conceptual framework, which of the following is an essential characteristics of an asset? So an asset is always provide a future benefit to the company. Now let's see the question answers options. The claims to an asset's benefit are legally enforceable. An asset is tangible. An asset is obtained at a cost. An asset provides future benefit. According to the FASB conceptual framework, which of the following is an essential characteristics of an asset? An essential characteristics of an asset is that if we see an asset in the balance sheet, so we can derive that the asset in the balance sheet will provide future benefit to the company. That's the essential characteristics of an asset. Moving forward to the next MCQ, which of the following assumption means that money is common denominator of economic activity and provides an appropriate basis for accounting, measurement and analysis? Means which of the following assumption means that money is the common denominator of economic activity and provides an appropriate basis for accounting, measurement and analysis? Going concern, periodicity, monetary unit, economic entity. Going concern is an accounting principle, so it got cut away. Periodicity, it's also an accounting policy, so it has nothing to do with economic activity. And economic entity is an entity, but over here monetary unit assumes that it is a common denominator of an economic activity and provides an appropriate basis for accounting, measurement and analysis. So moving forward to the next question, next MCQ, under a royalty agreement with another company, one company will pay royalties for the assignments of a patent for 3 years. The royalties paid should be reported as expense in the period of pay. This means that under a royalty agreement, one company will pay royalties for the assignment of a patent for 3 years. Okay, means for 3 years the royalty will be applicable. The royalty paid should be reported as expense in the period in which it is paid, or in the period in which it is incurred, or at the date the royalty agreement began, or at the date the royalty agreement expired. See, it will be the period when it is incurred, because we follow the concept of conservatism, we follow the concept of prudence. That means whenever the expense will arise, we need to book it right up front. So the period in which the expense got incurred, we need to report that from that date the royalty should be paid. Means from that date the expense should be incurred. Okay, moving forward to the next MCQ. The next MCQ says, The FASB amends the accounting standard codification through the issuance of, we saw it previously, that through the issuance of accounting standard updates, the accounting standards codification is updated. See, the updation of accounting standard codification is updated through accounting standard updates. I have covered this in my previous 2 lectures. Moving forward to the next one. According to the FASB conceptual framework, completeness is an ingredient of, we saw that faithful representation has 3 parts, F and C: free from error, neutrality, completeness. So completeness is a element of faithful representation. Completeness will be in faithful representation. The answer will be B. It's not under relevance. In relevance there are 3 parts: PCM, predictive value, confirmatory value, and materiality. So under relevance there are 3 parts, and completeness is under faithful representation. So the answer will be B. Moving forward to the next one. How are amendments incorporated into FASB accounting standard codification? It's the same one, repeated question. It's by releasing of accounting standard updates. Moving on to the next MCQ. According to the FASB conceptual framework, the process of reporting an item in the financial statement of an entity is option A, allocation; B, matching; C, realization; D, recognition. So we need to know each and every concept. See, allocation stands for distributing an amount according to a plan or according to a formula. Matching stands for we need to match the same amounts or the same transactions. Realization means converting a non-cash resources into cash. And recognition, we report an item like revenue recognition. We will study it later words. So recognition is the only process of reporting an item in the financial statement. So the answer will be D. Moving on to the next MCQ. This is the 15th MCQ, and I said I will be doing 2036 MCQ, and not only the MCQ, I will study the text, I will study my notes, and then we will move forward to the MCQ, and each day we will cover MCQ. So moving forward to the 15 number MCQ, the page number is the MCQ number. Which of the following is not defined in FASB statement of financial accounting concepts? Means which of the following is not defined. See, in my previous lecture we studied that what are the things defined in FASB. Estimates of future cash flow was defined, future cash flow time variation was defined, time value of money was defined, but risk tolerance of management is a part of risk management. It's not a part of accounting. So FASB is an accounting body. So risk tolerance of management is not covered under FASB. So the answer will be D. Moving forward to the next one. According to the FASB conceptual framework, predictive value is an ingredient of relevance, has 3 things: PCM, P for predictive value, C for confirmatory value, and M for materiality. So the predictive value is a part of relevance. Predictive value is a part of relevance. The answer will be D. Moving forward to the next one. According to the FASB conceptual framework, useful information must exhibit the fundamental qualitative characteristics. Qualitative. What is the meaning of qualitative and what is the meaning of quantitative? Quantitative means which can be measured in money, and qualitative means which cannot be measured in money. So faithful representation and relevance are the 2 things which cannot be measured in money and which has been spoken about in FASB. So the answer will be B. Moving forward to the next MCQ. Users of financial statement frequently rely upon the data displayed in the financial statements. Okay. To predict future financial outcomes, financial accounting concepts refer to the characteristics of accounting information that provides predictive value to the users as the quality of relevance, faithful representation, comparability, understandability. So we have predictive value, we have confirmatory value and materiality under relevance. Okay, so what does the question says? The question has, I can see the question has predictive value. Okay, so it obviously it will go under relevance because predictive value will go under relevance. So the answer will be A. See, if you see my previous 2 lectures, all the MCQs can be solved easily. Moving forward to the, but in other publication book, if you do not follow my notes and you study other publication books, you cannot solve all these MCQs, and these MCQs are MCQs of CPA itself. I got these MCQs from other publications book. The other MCQ is changes to existing authoritative gap for non-issuer, non-governmental entities are communicated by the Financial Accounting Standard Board through the issuance of, means they are communicated via accounting standard update. See, these are the thing: updation of accounting standard codification, separate documents available on FASB websites. So through accounting standard update, changes occurs, means things gets updated through accounting standard updates. See, the questions are getting repeated, but the questions are changing because they are trying to confuse you. But if you means go thoroughly through my accounts notes, you will not get confused. So moving forward to the next MCQ, which of the following is the most authoritative source of US GAAP? US GAAP, the most authoritative source is FASB, Accounting Standard Codification. Remember this. Moving forward to the next one, according to the FASB conceptual framework, to be relevant, information should have which of the following? According to the FASB conceptual framework, to be relevant, information should have which of the following? Completeness, predictive value, verifiability or neutrality. So the answer will be B, predictive value. Why? To be relevant, information should have predictive value and must be material. Moving forward to the next one, the primary purpose of not-for-profit organization statement of activities is to provide relevant information to its resource provider, managers, beneficiaries, state regulatory body. In one question only, we said that state regulatory body does not require any financial reports for its use, and the managers are the insiders. The primary purpose for not-for-profit organization statement of an activity will be to provide resources. So it will be its resource provider. So the answer will be resource provider. Why? Because regardless of whether an entity is profit or not, the objective of financial reporting is to provide information about the entities useful to primary users in making decision about resources. Alright, so moving forward to the next MCQ. What is the primary objective of financial reporting? The primary objective, number A, to provide economic information that is comprehensible to all users. No. See, those who are CPAs or those who are not CPAs. Those who are CPAs, they can comprehend the informations well, and those who are from science background or from arts background, they cannot comprehend the financial reporting. So it's not the primary objective to make it easy or to make it difficult. It follows a standard procedures. So number A is irrelevant. Number B, to provide management. Management does not require financial financial reports, because management will manipulate the financial reports. Number C, to provide forecast for future cash flows. No, forecasting is not done in financial reporting. Whatever there is the balance, means the financial reporting states as on a particular date, like balance sheet or a profit and loss, as on particular date it is reported. It does not provide future forecast. Number D, to provide information that is useful in economic decision making. Yeah, the primary objective of the financial reporting is to provide information that is useful for economic decision making, useful for the stakeholders. Stakeholders is a broad term. Stakeholders include supplier, it includes debtor, it includes customers, employees, and it includes government also. Moving forward to the next one, which of the following statement best describes an operating procedure for issuing FASB accounting standard update? So an accounting standard update is issued only after a majority vote by the members of the FASB. Just learn this option, that an accounting update, standard update, is only issued after voting of the majority vote of the members. It is covered in the first class. Conceptually, interim financial statements can be described as emphasizing which of the following enhancing qualitative characteristics. Interim financial statements are the financial statements which is published in between the year. So it emphasizes timeliness by providing financial information based on actual performance and estimates prior to year end, because it is published between the year, means it can be published quarterly, it can be published semi-annually. So the main characteristics is timeliness over here. Verifiability, relevance, faithful representation, this option does not goes over here. So remember, conceptual interim financial statement can be described as emphasizing which of the following enhancing qualitative characteristics? It is timeliness.